All right, well, hey guys, this is Eric. I'm back for another round here, and we're going to talk about a couple of things today. So if you don't know me already, if it's the first time to the channel, to wherever you found me, go ahead and hit a like, comment, subscribe after you've heard what I have to say and if it's any value to you. That's the only way we do things around here is through word of mouth. I don't charge anything for this stuff. I wished up and down that I had somebody that would just give me the answers for free when I got in here, and what I realized throughout all of that time was that nothing's for free. It either takes time, energy, or some type of resource. So I'm putting my resources towards this and then coming to you, well, live in this format, but it'll be recorded forever in the ether webs here for you guys to revert back on. So what we're at right now, so where we're at currently is you have economists on one side of the aisle and the other side, right? Because it's just an opinion at one time. Is where are we at in this market shift that is going on right now? Right, we've got higher interest rates or interest rates stagnating. We've got Jerome Powell coming out saying, I don't know, I don't know, I don't know. We've got monetary policy being affected by politics. What's going to happen here? What's going to go on with Section 8 housing or any of the other stuff that goes on with HUD with monetary policies? And what we're talking about here is this a buyer's market or a seller's market? And what I would like to ask you guys is, what the hell is it? What is a buyer's market and what is a seller's market? In economics, we talk about just supply side, right? We talk about there being an overabundance of buyers or an underabundance of sellers, whatever the case may be. But a buyer's market is to say that there are more properties on the market that is causing competition to bring the prices down, and that's why it's a buyer's market. Typically, in those situations, you'll see a lot of investors go into buy and hold strategies and those things, right? Where interest rates would be at a higher rate or the like. For a seller's market, we're talking about lower interest rates. It's easy for them to get money, and so it's easy for them to go and get that conventional financing. And there's less properties on the market, which means that there's more aggressiveness towards those prices, so it can shoot those prices up. So a seller's market is where everybody wants to buy your properties, and a buyer's market is where nobody wants to buy the property, so we can go and buy them at a steep discount, to summarize that to 1 or 2 points there. But one of the big things I'd like to talk about is, as a wholesaler or as an investor, is making sure that we understand what we're doing, right? All things happen in cycles when we talk about the market. There is no one time that you can perfectly time things. And you heard me talk about this in another video, but my point there is that you can never perfectly time something that's constantly in flux. There's something called equilibrium in the economy, and that's something that we're always desperately trying to get to, and that's where supply meets demand. But it's never going to be that, so there's always going to be some loss on either side of that equation. And so that's where we're at, is we're trying to time that blemish or that deadweight loss, or when it shifts from one side to the other, so that we can make the most amount of money along the way. But the key here I'm talking about is when these shifts happen, there is a length of time that you can get involved and still make out on that. So for instance, markets are shifting, and we're seeing this all over the country, and even just for myself, just recently, I've seen an uptick in buyers accepting novations over cash contracts. I've seen people that are more willing to wait for their money, which is odd in the markets that I'm in, considering most people are saying that this is a buyer's market, meaning that sellers should just want to sell their property for anything. So I think that there's a couple things at play, and it's not just me that think this, it's every paid economist anywhere, right? Is they study these things and track the market to see where they can strike or where they can give advice on other people to strike. And in this situation, I think that we're kind of in limbo. It's not quite a buyer's market, it's not quite a seller's market quite yet. Or we're in flux, and this is lasting longer than normal because we're not seeing interest rates drop, which is not necessarily a buyer's market, or I'm sorry, a buyer's market in that regard, because interest rates are still here. But then we still have the same sentiment from 2020 and 2021, where we have an unrealistic, in my opinion, expectation of property value. Right? People are still looking at their 2 and 3% interest rates and are still stuck on the prices from 2021, 2022, and they still think they're going to get that. And there's one other piece that a lot of economists are talking about, is the rise of unemployment. Right? When we see those numbers hit closer to that 6%, ask anybody that knows anything about economics, we see those numbers hit closer to 6%, and then we're going to see major things change. Right? More often than not, they're going to start printing money, and what does that mean? Right? And I'm not going to go full into economics here, but what that means is it's a better market for us as buyers, right? As wholesalers, investors. It means that our investors can have deeper pockets, have larger bandwidth, so that they can buy more properties, or they can be more aggressive with the properties that they buy. So understanding your market is a big piece, but it's not just who your buyers are as a wholesaler, right? It's about who you are as a buyer, if you are that, but it's who's buying and where are they buying. right? A lot of times we see this difference of rural and urban, and people just leave it there, right? I only want to focus on the urban, or I only want to focus on the cities that have, 100,000 plus, or whatever the case is, because we want the quick and easy flips, or we want the quick and easy wholesale transactions so that we can move on to the next one, because that's the name of the game, which is economies of scale, right? Which is more products pushed for lesser price, which means more money. So when I'm looking at the market and I see people jumping at these rural investments, I started looking around, and I've been on a lot of these properties around DFW, and one of the major things I've seen just as of late, and that's what I'm talking about just in the last 2-3 months, is a major uptick for just my buyers willing to buy outside of the city limits, especially here in Fort Worth, which has always been a thing. You think about Azle, you think about Weatherford, you think about any of these other places, Burleson, Cleburne, Joshua, any of these places that are around the area. And what I saw while I was driving out there was something that was pretty cool. And I may be, giving away the tea, but at the same time, this is for you guys to take a look at, right? So whereas fundamentally, previously at least, we were not looking so much at the urban because they're harder to move, right? And that's where novations come in, by the way. We can talk about that another day, but they're a really good option for those rural properties, getting them on the market and doing that. But in this situation, we didn't even have to do that because a lot of buyers are looking to do that. And when I went out there, I figured out why. Right, when we did a little bit of research and we saw that there was some land on this property, then while I was driving around, I saw everybody was placing out and buying these properties, parceling them out into 2 and 3 acre lots and putting these awesome little homes on there. And when you drive through, you can see literally what I've now coined country gentrification. Right, we have all these people coming in from all these other states, right, that are coming in here and they want a little slice of Texas. And so maybe you can't get that in Fort Worth. Hell, you probably can't get that even in Burleson anymore. But places like Springtown or any of the other places, that's a cool little piece that you can see that market shift in real time if you're out here doing the work, right? So to kind of round that out to the final pieces here, the market is shifting, but it's always shifting, so it's not news to anybody. If you're not paying attention right now, then you need to be. And if you stop paying attention, it will leave you behind, and you will never get like these other people, the haters from the sidelines, that would have been like, oh, I guess you timed the market wrong. Yeah, but you miss all shots not fired, right? Every round left in your chamber, every round left in your magazine is a round that you missed the target. And so it's automatically 10 points off. So you got to get out there and do the work, and that's my point. So if you're not out there moving around, shaking and moving with the people that are around you, you're not going to see these trends, especially if you're just on the sidelines watching me do this. You got to get out there and do it. So that's my piece. I got to run, but that's what we talked about today. We talked about market shift, we talked about buyer's market, seller's market, a little bit of economics, and what I'm seeing in the markets around here in Fort Worth. I'll see you guys next time. Thanks.